My understanding is that continuation funds so far are for trophy assets.
Right.
It's something you want to keep longer. You want to lock in your IRR, nice, and then you want to maximize your multiple. So this is one of the ways where, and you make people happy on the way because apparently fund investors decide in the majority to cash the cash back. If they want to, why not? I'm not sure that anyone with the resources to do that would finance a continuation fund buying assets which are not performing. I don't see the logic,
No.
especially to buy it at NAV or at
Yeah.
small discount to NAV. You would need to find someone who is providing significant capital without doing the work, and I don't know who would it be, to be honest. So there
Well,
might be the
this
odd
is
one.
encouraging. This is encouraging
Yeah.
because I mean the concern with innovations is that there may be some misalignment of interest down the line.
Yeah.
But what you're saying is actually the interests remain relatively aligned.
That's my understanding
Yeah.
so far. But it doesn't mean that we shouldn't ask the question. I mean, for the bank, what we do regularly is to try to understand what's going on and then where are the sources of risk for clients and of course try to mitigate them as much as we can or sometimes completely avoid them. The risk is eventually that because it's already half of the secondary volume per year, that eventually it becomes so big, and then we start to see some assets which are transferred, which are not optimal or in a good shape, and because the mechanism would feed on itself and it would become like overheating. But so far, I didn't hear anything from that. I don't know everything, obviously. I don't have God's view, and then I don't know every single transaction, but I didn't hear anything along these lines.
Do you think they're here to stay even when exit markets really start to open up? Do you think people will still use these vehicles?
That's an excellent question, actually, because I was wondering, in a way, fund managers now have another tool in the toolbox. And if you have a trophy assets and you don't want to let go, that's a really useful one. But as soon as you get liquidity, why would you use this tool again? I mean, it opens so many questions, like why do you want to do it? It's probably fairly cumbersome to structure that. You have to talk to a lot of people. And so an outright sell is nice. It's clean. It's a track. It's an exit, no question, third party. Majority of buyout exits are trade sales still. It's very, very clean, and for a track, it's a very strong signal. If you do an IPO, it's even sometimes better because it's a very clear signal.